for residential mortgages, buy-to-lets, further advances, second charges, commercial finance, bridging, and development finance. I am just on my way to the office, and I thought I'd just pick up the phone and do another little video for you on another topic. So I think today's topic is going to be for landlords and the changes in the market. So I'm sure everyone's aware, or you might not be aware, but last October some new regulation came in called the PRA regulation. And this regulation made the underwriting process for landlords with more than 3 properties much tougher. So they split landlords into 2 categories. So if you've got 3 or less properties, you are a non-professional landlord, and if you have 3 or more properties, as in buy-to-lets, you are classed as a professional landlord. Those professional landlords need some extra underwriting now. Each lender's different. Most lenders are PRA regulated, some lenders aren't. However, the maximum that you're going to need is going to be a business plan, which sounds more complex than it actually is. It's just normally a 1-pager, just demonstrating that you know what you're doing, that you've got a plan, how long you've had the properties for, why you have them, do you like rental, do you like the growth in the capital, are you going to sell some, buy more, you know, just a paragraph just explaining your plan and vision for your property portfolio, just to give the lender some comfort that you are a professional landlord, you haven't sort of fallen into it by default, for example being left a property, inherited a property, gifted a property, etc. So you plan to buy them and run it as a business. So after your business plan, the next thing they're going to need is your property portfolio schedule. This is a spreadsheet showing the detail of each property that you own. That detail needs to be the full address, the mortgage lender, the amount of mortgage outstanding, the purchase price, the date you purchased it, the property value, the rate that you're currently on, the monthly payment, the rent per month. If you've got that, that's the majority. Some lenders might ask a little bit more, like the rate that you're on, the date that the rate comes to an end, and your early repayment charge. But if you've got those first sort of 10 things that I mentioned, that's pretty much covered it. So that's the business plan and your property portfolio schedule. The next thing they're going to want is assets and liabilities. This is going to be sort of a set document from the lender normally, and just a list of all the assets and a list of all your liabilities, including mortgages, credit cards, loans, debts, etc. So they can work out your net worth and get a bit of comfort, possibly again by any equity or any assets you've got at the background, what sort of figure that is. It doesn't have to be a set figure, it is just a sort of form that needs sort of a tick box next to it to say that it's been done and it's sufficient, that you're not in negative net worth. So those 3 things are the big changes. The other thing that you'll notice if you're a landlord trying to get a mortgage is rental calculations. So basically, because the bank base rate's quite low, and rates are relatively low, even in the buy-to-let market, the lenders want to build in a buffer as a safety net in case the rates go up in the future. Sorry about the light that keeps coming in, by the way. That's a bit better. So this safety net is basically a calculation that the lenders have, and this will determine the loan size. So for example, again, worst case scenario, they're going to use a rate of 5.5%, and that's what they're going to. Let's say your loan size is 140,000, they're going to times that by 5.5%, as if that's what the rates might go up to at some time in the future. And then once they've got that figure, they're then going to times it by 145%. And this 145 is the coverage that rental must have. So this is quite complex if you're new to buy-to-lets. This is a calculation that your broker's going to do for you. So please don't worry about it. It's not something that you're going to have to work out every time you want to get a mortgage, not at all. But what it does mean is the rental figure is something that your broker's going to ask you for quite upfront, because this is going to determine the loan size. So depending on what your rent comes in at will determine your loan size because of that calculation. So if it's quite tight on rent, if you're not really getting the maximum rent, or if the loan size is quite large, then you are going to have to use a lender that has a lower rental calculation. So that might not necessarily be the best rate, but there's different lenders with different criteria. So once again, it's quite a complex research and sourcing process that goes on for this. So that's why you need a broker, because we know the lenders that have the lower rental calculations. Now, if you absolutely have used a lender with the lowest rental calculation and you still need some extra money to cover that mortgage, or you need to draw out some extra money, then there are other options for you. So you can use that mortgage lender as what we call a first charge, which is your mortgage has first charge over that property, and then we can top up with a second charge, and there's some lenders that we can use for that with some quite good USPs. And I'll speak to you about that on another topic. So yeah, so in a summary, quite a few changes in the buy-to-let market. If you're a landlord with 3 or less properties, this isn't going to affect you. If you're a landlord with 3 or more properties, then please expect to be asked for a business plan, assets and liabilities, the rent per month, and your sometimes a cash flow forecast as well, but all these things will be explained to you by your broker. Some lenders also have a cap on how many properties you can have in the background, so most of the time it would be 10. Now and again lenders don't have this criteria, so once again, depending on how many properties you've got in the background is going to determine what lender you go to. And finally, now a lot of people are choosing to purchase or refinance their properties as a limited company instead of owning it in a personal name. So first of all, always get accountant's advice. I am not a tax expert and I would not be giving that advice. So always get the advice of your accountant as to which route is best for you with your other circumstances in mind. There's more and more lenders now lending in this market because that's the way the market's going. There's competitive rates. The underwriting process is very similar. So yeah, just know before you speak to your broker potentially which route you're going to take, personal or limited. So yeah, I've rambled on for quite a long time. It's quite a big area to cover, but yeah, this was a topic of PRA regulation for landlords with 3 or more properties, just to give you a bit of insight as to what the market's sort of asking for at the moment, our underwriting process. So any questions, please leave them down below. As you know, this is my mortgage channel, but it is not advice. I cannot give advice on this mortgage channel. I would only give advice once a thorough fact-finding process had taken place. If that's something you do want to do, then obviously private message me and we can arrange that. But this channel is information. So just giving you information to help you prepare for your next mortgage, or prepare to speak to your mortgage broker, sort of pre-armed with the sort of things that they're going to need and why. So hopefully that's helped. And yeah, if you like the video, please give me a thumbs up. I am new to YouTube, so please forgive me for any lighting issues, and hopefully you can hear me okay, but you know, any feedback then please leave it down below, and I'll be back soon with the next topic. Thanks for listening. Bye.